Why? Why is it that 90% of retail traders lose money, even though they all have access to the exact same free tools? Here's the uncomfortable truth that your broker will never tell you. If the tool is free, you are the product. Do you really believe that the multi-billion-dollar hedge funds and bank algorithms you are trading against are making decisions based on a standard RSI set to 14 periods? Do you think Goldman Sachs is waiting for the MACD lines to cross? They aren't. They are using tools designed to exploit you for using those free ones. You aren't trading against humans anymore. You are trading against algorithms programmed to hunt your fear and target your stop losses. Today, we are deleting the indicators. We are dismantling the retail trader mindset. I'm going to show you how the smart money actually moves price, and why your favorite indicator is nothing more than a trap designed to turn your capital into their exit liquidity. To understand why you keep losing, you have to stop thinking like a trader and start thinking like a casino. In the financial markets, the house is the smart money, the banks, the institutions, the market makers. They have a problem that you don't have: liquidity. If you want to buy one contract of gold, you just click buy. You get filled instantly. But imagine you are a bank and you need to buy 50,000 contracts of gold. You cannot just click buy. If you did, there wouldn't be enough sellers to match your order. Your massive buy order would shoot the price up instantly, and you would end up buying at a terrible, high price. This is called slippage, and institutions hate it. So, what do? They need to find a place where thousands of traders are all selling at the exact same time. They need a mass event of selling to absorb their buying. And where do they find that? They find it at your stop loss. Think about the standard advice. Buy at support, put your stop loss just below the line. The banks know this. Their algorithms are programmed to see that line. They know that millions of dollars of stop-loss orders are sitting right there, just waiting to be triggered. To a bank, your stop-loss isn't a safety net. It is gasoline. It is the fuel they need to fill their massive orders. They aren't trying to hurt you personally, they just need your liquidity. Let me walk you through the anatomy of a liquidity trap. This happens every single day, on every single asset class. First, the market makers create a clean, obvious pattern. Let's say it's a double bottom support level. They let the price bounce off it twice to prove to you that it's safe. They want you to feel confident. They want you to load up your position. The more confident you are, the more money you put in, and the bigger the liquidity pool becomes below that line. Then, they wait for your indicator to confirm it. They wait until the RSI is oversold. This is the bait. You see the support, you see the RSI, and you think, this is a perfect trade. You enter long. You put your stop loss below the low. Now, the trap snaps shut. The algorithms push the price down aggressively. They smash through the support line. This does two things. First, it triggers your stop loss, which forces you to sell. Second, it tricks breakout traders into thinking the support has broken, so they enter short positions. Now there is a massive flood of sell orders hitting the market. This is exactly what the bank was waiting for. They step in and buy all of those sell orders. They absorb the panic. And the moment they are filled, the price reverses. It rockets back up, leaving you with a loss and a feeling of confusion. You checked your indicator, you followed the rules, and you still lost. That isn't bad luck. That is a designed engineered trap. Don't just take my word for it. Let's look at the evidence. I'm going to show you a real chart on the Nasdaq 100. Look at this area right here. Notice this level. We have clear support. We have wicks rejecting this price multiple times. If you were using a standard strategy, you would be looking for buys here. Now, look at the bottom of your screen. I've turned on the standard RSI indicator. It's hovering below 30. It is screaming oversold. Everything looks perfect. Now, watch what happens next. This big red candle. It doesn't just break the line, it destroys it. It closes below the support. At this exact moment, retail traders are panicking. They are closing their positions. The financial news sites are probably writing articles about how the market is crashing. But look at the volume. See this massive spike in volume on the red candle? That isn't retail traders selling. That is smart money buying. They are absorbing the liquidity. And look at the very next 3 candles. The price immediately reverses. If you relied on the RSI, you got stopped out at the absolute bottom. The indicator told you what happened, but it failed to tell you who was controlling the move. So, how do we fix this? How do we stop being the victim? The answer is simple: stop trading patterns, and start trading liquidity. You need to see the market through the eyes of the institution. This is where the QuadFlow algo changes the game. I built this tool because I was tired of trading blind. I wanted a way to visualize the institutional footprint in real time. Let's look at that exact same crash on the Nasdaq, but this time with QuadFlow enabled. Notice that the chart is clean. No messy lines. But look right here, at the exact bottom of that crash. While the RSI was just showing oversold, the QuadFlow algo printed a specific institutional trap signal. It detected the volume anomaly. It recognized that while the price was dropping, the order flow was actually bullish. It gave a buy signal right when the rest of the world was selling. This isn't magic. It isn't predicting the future. It is simply processing the data that the banks don't want you to see. It keeps you out of the fake breakouts and gets you into the real reversals. Trading is a war. It is a zero-sum game. For you to make money, someone else has to lose it. Right now, if you are using the same free tools as everyone else, you are the one losing it. 2026 can be different, but only if you change your strategy. You can keep donating your money to the market makers, or you can align yourself with them. The choice is yours. The link to the QuadFlow algo is in the description below. It includes the full indicator suite, the training on how to spot these traps, and access to our private community. Stop guessing. Stop gambling. Start trading with an unfair advantage. I'll see you on the inside.